Good evening, money magnates and master traders. Looks like the S&P 500 avoided a pullback today and closed just a few cents higher than it did last Friday. Now, we talked about the credit rating going down to AA1. I mentioned it to us, guys. There's a couple of ways to look at it. Going down to AA1, AA1 is not necessarily bad. It's going in the wrong direction, of course, but it's not necessarily bad. It looks like the dip buyers just bought the dip today. And in my opinion, it was a very easy and pretty good trading day, at least for day trading. Uncle Charters wrote in his Discord, bulls must avoid a breakdown of the 585 level because that was a macro level fib level. From here, mind you, I wrote this at just a minute before market open. I wrote from here, if 587 holds as support and 589 clears, then back to 590.5 and 592 plus we go. If 587 fails, then 585 backtest will be in play, and below 585, bulls would be in big trouble. Be ready to react. So Uncle always uses a 15 to 30 minute chart. In this example, it's a 15-minute chart. You can see on the 930 candle, guy, on the first candle of the day, it stayed above the 587 level. Here's my 587 level right here. And it defended as support in the pre-market. We never broke it down. We cleared 589 as on the first candle, which Uncle wrote in the group 589 cleared, put in 590.5 and 592 in play. We cleared it on the 15-minute chart. We cleared 590.5, and then we cleared 592 on the next candle, on the 945 candle, 10 o'clock candle. We consolidated for a little while before we continued pushing upwards, coming just shy of my 596 target. We smashed 594, going up 595.5-ish. So in my opinion, it was a really good trading day because it picked a direction, not very trappy, which is nice. Found the setup and it played out. So hopefully I'm praying that a lot of you guys that's watching me right now was able to capitalize on this and get a green P&L. Now going to the daily chart, we can see that that breakout of the 589 level, that's this green line right here, that was based on the mother candle's high from last week. We had an inside candle setup from last week. We broke out the high of the mother candle, which was 589. And once again today, despite gapping below that 589 level, we managed to avoid a false breakout. So is there any bearish sign right now? Is there a bearish sign? Still no bearish sign, guys. We're above the 5 daily moving average. We managed to maintain the breakout from last week. Maybe it was just a bear trap from what it looks like. Okay? Now, what does Uncle always say? When we get melts up like these or bullish trends like these, it usually ends with a false breakout setup. But not just any regular false breakout setup. Usually something elevator style to the downside. That's why a lot of time Uncle's been mentioning the stairways up. The stairways up, because I don't want us to call a top unless we get a combination of a false breakout setup and that elevator down style move to the downside, which we still did not get, guys. So if you ask Uncle Charters, are you bullish or are you bearish? I am bullish still. Not because I'm a bull bias trader, but because it's what the charts are showing. And if you're bullish, that means I'm expecting or I'm favoring more upside. I'm not 100% we're going to get more upside. There is no 100% in the stock market. But greater than 60%, I do favor that we head up higher, so long as SPY can stay above the 589 level and the 585 level lowest. Two reasons for these levels is because, one, the 589 level is still the breakout level of the inside candle setup, which is still intact. And the second one is 585. That's a macro level fib level. Macro level. Swing trading level. As long as above 585, more upside is possible. Now, as far as the plan for tomorrow, I'm going to be watching that 596 level. Today we close at 594.85, which technically that is a breakout of my 594 level. As a matter of fact, we closed above that level last Friday, so the breakout technically stayed intact today. Bullish follow through, clear 596, 598, and 600 plus would be in play. The big even 600 number would be in play. And above that, above 600, there's a good chance we're likely heading back to all-time highs or even maybe just shy of it. I don't know if we're going to go to new all-time highs, but I feel more comfortable as of right now saying 600 would be the target. If 596 clear and above 600, all-time high maybe can be tested. And once again, do not get bearish unless we get that elevator style move to the downside, that false breakout setup, which would need 589 and 585 to fail as support. Now, if those levels fail, would Uncle Charters be fully bearish? I'll be bearish to for the short term because we do have this trend line. It would be very healthy if SPY can drop back down to 570 to back test this trend line for the third test. We only had 2 tests technically off this trend line. So a third test would be pretty healthy, and still it would give bears a chance to make some money, and it would still be overall bullish win-win situation. But that would not be possible unless 589 and 585 fail as support. As I always say, sheep style trading. Sheep style means we are looking to react to the price action. We're looking to follow it. So now that you guys know the levels and the setups, tomorrow is up to you guys to trade it unbiasedly. Moving on to Triple Q, once again retesting at 522 level. Despite an amazing gap down, we actually opened today around 514-ish. Holy moly donut shop, and we closed at 522, my 522 level. Isn't that amazing? How it just closed right on Uncle's level. I'm telling you guys this, if we cleared that 522 level, we are heading up a lot higher. There's a good chance we head up to 528 to the 530 zone. That would be a possibility. Even the 532-ish level would be a possibility. Another $10 move if we can clear 522. I'm taking the pullback serious and the rejection from 522 a lot more serious. I mean, we've been getting some green candle and higher closes, so some lower closes would be nice. So if we truly reject from 522, supports at 520, 518, 516, 514, 512.5 in the fib level, macro level fib level at 511. Loss of 511 is when Uncle would favor a much deeper pullback. Remember, we have that uptrend line, only about 2 touches as well for Triple Q. A third test would require Triple Q to drop all the way below 490 to the 490 area. But it will not be possible unless we start breaking down support levels. 520, 518, 514, which held today, 512.5, and the macro level fib level at 511. I would be bearish in favor of pullback if all those support levels, and I do mean all those support levels, fail. Otherwise, we clear 522, we are heading up higher. Here's NVDA, just like Triple Q, is also consolidating below a critical fib level. 522 is not a fib level, but NVDA is consolidating just below a critical fib level. Around 136.3 is the level I would be referencing. Now, I do have a shorter term fib level at 135, which NVDA avoided a breakdown of it today. A gap below it today, opened below it, but managed to close above it. So if NVDA wants more upside, 136.3 must clear. We've been consolidating above it. There's probably some stop losses above it, so you got to be careful for a false breakout setup here. But if it can turn 136.3 into support, 138, 140, 142, and 143.5 would all be targets for Uncle Charters. Now, if we are going to break down, first of all, we need a close below 135. Dropping below and washing below 135 is not enough, because we did it a few times and it did not lead to more downside, and avoided a close below it a couple of times. So a close below 135 would be a good start. Now you can see that we've been consolidating, which means there's a chop range. I have a 132 level and a 130.6 level. If we're going to break down this chop range and end it bearishly, I need to see 132 and 130.6 fail. If it does, we should get a $10 to $20 move to the downside. That's going to be a beautiful move to the downside. But it needs to lose 132 and 130.6. Otherwise, above 135 and clear 136.3, we are heading up higher. Tesla, managed to avoid a breakdown of a major critical fib level, which I have at 339.8. Closed above it. The market makers just won't give the bears some happiness. Can we let the bears be happy? I don't know. But if the answer is yes, they need a close below 339.8, which they haven't gotten in about 4 trading days. Almost had it today, but not quite. Bears, y'all need to break down 341 and 339.8. If those levels fail, 338, 335, 332, 330.6, and 329 will all be in play. Below 339.8, I'll be bearish. Below 330.6, I would favor a much deeper pullback. But above 339.8, this could be a buy to dip opportunity. I'm going to give the bulls the benefit of the doubt. Now clearing 343 tomorrow, we'll put 345. We do have a gap at 346, actually 346.5-ish. Yeah, above 345, 346.5, 348, and 350 plus would all be targets to the upside as long as above 339.8. Here is coin. It has an inside candle setup. It's been pretty volatile lately since earnings. So an inside candle setup is a sign that volatility is decreasing a little bit, okay? But it doesn't mean it's not tradable. From where it's at right now, I have support at 263, 261, 259, and 257.5. Look to short if those levels fail, especially 257.5. It should put us back down to 256, 253, 250, 248, and 246.7. Below 248, I would be bear bias. Now, if we're going to be bullish, I have resistance at 266, 267.6, 269, and 271. Above 271, Uncle Charles would be bull bias. I would favor we get another $10 to $20 pop to the upside. VIX, it tried to gap up out of this wedge. This falling wedge, this down trend line. As you guys can see, no follow through. No follow through on the gap up, all right? So possibly a false breakout setup. Either way, I have support at 17. And if we lose 17, guys, VIX is heading down a lot lower. I can't trust a bounce on the VIX unless 19, 20.8, and 22 can all clear as resistance. Guys, thank you so much for being here. This means the world to me. I love y'all. Peace.